Following information relates to Madurai branch. We have stock on 1st Jan 2014 11,200. Then branch debtors on 1st Jan 2014 6,300. Goods sent to branch 51,000. Then cash sent to branch for rent, salaries, petty cash purposes 1,500, 3,500 totaling to 5,000. Sales at branch level, cash sales 25,000, credit sales 39,000, total 64,000. Cash received from debtors 41,200. Stock on 31st December 2014 13,600. We have to prepare branch account for the year 2014. So basically we have to prepare Madurai branch account for the year 2014. Let's get started. So let me put it. Madurai branch account. So we should have debits and credits. Debit and credit. First let's capture the opening balances. What are the opening balances we have? One is with respect to stock, the other one is debtors. So let's write to balance brought down, and this is on 1st January 2014, right? So we'll write this is on 1st Jan 2014. To balance brought down, one is with respect to stock and the other one is with respect to debtors. What is the value of stock? The value of stock was 11,200, debtors is 6,300. So we'll write 11,200 of stock, 6,300 of debtors. So total put together it is 17,500, right? Next item, we have goods sent to branch 51,000. So we'll say two goods sent to branch. Goods sent to branch and the value is 51,000. Then we have cash sent to branch for various purposes like rent, salaries, petty cash. So we'll capture all those. To cash, or we'll say to bank. To bank, and the entries are number 1 for rent, number 2 for salaries, and number 3 for petty cash. The amounts are 1,500, 3,000 and 500. So all three put together total works out to 5,000. So these are all the cash sent by HO to branch. Okay. Then what else we have? So we have completed that. Then we have information about sales at branch. There is a cash sale and credit sale. Cash sale, since that will be transmitted back to head office, that will appear in the branch account, but credit sales will not appear. So we are going to assume that this cash sales is getting transferred. Now when this cash sales is transferred, they will also transfer the cash that is received from the debtors. Okay, so the cash transmission will be for this 25,000 plus this 41,200. Okay, so we'll do that. By bank, that is head office is receiving money from branch. One is for cash sales, two is for realization from debtors. Cash sales is 25,000, realization from debtors is 41,200. Fine. Then let's go back. Then we have credit. Okay, that we'll see where we can use. Then we have closing stock on 31st December 2014 13,600. So we'll capture that. By balance carry down. By balance carry down. This is on, what is the date? The date is 31st December 2014. So on 31st December 2014, by balance carry down, there is a stock. What is the value of the stock? It is 13,600. What are the opening balances we had? The opening balances were stock and debtors. Now we have only stock. What about the debtors? We don't have that information. It means we have to find what is debtors. Okay, for that we need a working note. So we'll have a small working note to find out debtors. Working note 1. We'll open a debtors account, and that will help us to understand what is the closing balance of debtors. What was the opening balance of debtors? To balance brought down. Let's pick up the opening balance of debtors. It was something like 6,300. It was 6,300. Then whether debtors have increased? Yes, debtors have increased because there was a credit sales of 39,000. Okay, so two sales 39,000. Whether debtors balance have come down for any reason? Answer is yes, debtors balance have come down because there is cash realization from debtors to the extent of 41,200. So here we'll say by cash that is realized from debtors, which is 41,200. It means you have two items on debit and one item on credit. So the balancing figure is obviously going to be the closing balance. So let me total the higher side. On debit side you have higher total, so it works out to 45,300. So let me write that both sides, 45,300. So this 45,300 minus 41,200 will tell me or will give me the difference of 4,100, and this is nothing but the closing balance of debtors. So by balance carry down is 4,100. So let me go to this. Here I'll write debtors. We know the value from working note 1 and it is 4,100. Right? So now both put together will give us the closing balance, and it is 17,700. Okay. Now we have to find out whether there is profit or loss. For that we have to total on the higher side. Let's do the totaling. So let's see the debit side and credit side. I think on credit side we have higher value. So if I total credit side, I'm going to get 83,900. So let me write this on both sides, 83,900. It means on the debit side there is a difference. On debit side there is a difference, and this difference have to be transferred to profit. So to general profit and loss account. I'm going to transfer this profit to general profit and loss account, and it works out to 10,400. In this way, we can understand that this branch has made a profit of 10,400, and this will be eventually transferred to the general profit and loss account.